Hi, this is George. Today I just want to go over the managed care bear market, speak a little about what's been going on, what names are out there, and ultimately if any buying opportunities exist. I think it's a good time to look this over given that we're about to uh, get some major earnings releases from this company in the following weeks. Before I do that, I do have to say that none of this is financial advice. Do your own research and always consult a licensed financial professional before making investment decisions. Let's start by looking at the great financial crisis. I wasn't investing back then, maybe you were, but it's not going to be a surprise when I tell you that financials went down over 80% from the start of 2007 to the market bottom in early 2009. And even very well run, well capitalized banks like JP Morgan Chase dropped by 64%. So even those names that weren't as exposed to these toxic products were damaged in the crisis, and perhaps undeservedly so. And ever since then, JP Morgan has become perhaps the biggest success story in banking. It's worth more than Citigroup, Bank of America, and Wells Fargo combined. And a large part of its success is because they took advantage of the GFC to consolidate and to grow market share and to come out stronger than ever before. And the lesson I want to take away from this is that a good crisis not only offers you great discounts on great companies, which it does, but allows the best companies to come out stronger and bigger than ever before, while the competitors wither away. So right now, managed care is in a similar crisis. We haven't seen a drawdown this big in this industry since 2008. And this really only started around a year ago when insurers started to report higher than expected costs. Now you can see some of these names are down over or around 50%, right? And year to date, this is probably what you've seen in the news. UNH is down over 40%. Elevance is down year to date. And CBS is having a great year. It's up 40%. You might be tempted to think, hey, it looks like CBS is the strongest company and UNH is the weakest. I just want to show you the company fundamentals and let you decide. Okay. These are margins over time. You can see this is over multiple years. This isn't a fluke. These results are consistent, and UNH operates at twice the margin than its peers, while CBS is dead last. Let's take a look at return on equity. Same story. UNH consistently delivers over 20%. Elevance has some good numbers, and CBS is dead last. Return on assets, so we're stripping away the leverage effect. UNH is still on top, and CBS is dead last. And lastly, if you look at cash flow, UNH generates the most cash because it's the largest and the most efficient, and this industry rewards large, efficient players. So it looks like, just looking at the fundamentals, that the market has completely inverted which companies have the highest quality and which companies are lowest quality. Lastly, Stephen Hemsley has just returned as CEO of UNH. The last time he led the company, he took over a bit before the great financial crisis. He left in 2017, and the stock sextupled, while uh, the healthcare ETF tripled. So that is an incredible outperformance. He pioneered the managed care business model, and now he's taking over during a crisis. And my money is that he's going to be able to execute as well again. So again, I'm bullish on UNH because from a fundamental perspective, it's the best company, it's the most well run, it has a proven CEO, and to me, that's the winner. I do want to quickly address these lawsuits that we've seen These are federal investigations against managed care providers. You can see United Health is not the only one, despite them being in the limelight almost all the time. In fact, every single name that we covered is being investigated by the DOJ. And for context, I've added investigations against defense contractors. And these have been recently settled investigations. Needless to say, I'm not worried about these lawsuits. I don't see them as a huge deal. I think it's mostly noise. And I do not believe that the government is going to shut down these companies because they depend on these companies to manage their Medicare and Medicaid programs. What is going on right now is that these companies are wrapping up negotiations with the government. They're submitting their final bids. And I think that a lot of the political pressure that we've seen in these companies is very well timed to these negotiations. And they're trying to, get them from not passing down all these healthcare inflation costs that we've seen over the past year. That is pretty much it. That's my entire view on the subject. I hope this was helpful to you. I am working on a pitch for a stock that I recently bought in a much less complicated industry, a much less controversial name. I'm sure you'll enjoy that as well. And without further ado, thank you for your time, and I'll be on the lookout for comments. Thanks.